Hey guys, Koukun here. So we are at this duplex conversion project that I've personally purchased in the city of Welland, and we have finally completed it. Just last week we got the city's final inspection, passed, clean. This is a legal basement apartment. So if you follow me, so this didn't exist when we bought this property. We put in a brand new kitchen, stainless steel appliances. We got the dishwasher, just a simple IKEA kitchen with a simple subway tile backsplash, but just it looks beautiful. Laundry is going to go in here. We haven't got the machine yet, but it'll be here soon. And we have all of this open space for our living room. So again, if you saw some of the previous videos when I bought this home, one of the best parts about the home is that it is a raised bungalow. So what that means is you have these massive windows, and look at these ceilings. Like the tip of my fingers is probably 8 feet high. So you have this amazing ceiling height. It just makes it feel quite open. And the property is actually not that big. This bungalow is only 800 square feet. So this apartment is probably 650 square feet-ish. So it's definitely not a big apartment at all. It's only a 1-bedroom basement apartment. But by finishing it well, even right now, we have a tenant who's interested to rent it for about $13.50 a month. So we're getting a lot of interest, and we're going to get premium rent. I think upstairs is already rented out right now at $16.50, so we'll still be able to generate close to $3,000 a month in terms of income on this property. So yeah, super pleased how it turned out. Like if you see here, this washroom also did not exist when we bought the place. This was completely done during the course of our project, and just really happy how it turned out. Looks clean. We got a full tub and shower, so it looks very clean. So beautiful bathroom, beautiful kitchen, nice big open space. We got a lot of natural light, and yeah, I'll also go through the numbers on this property in terms of how profitable it is. And the craziest part about this particular project is I bought this property just 6 months ago for $400,000, and a comparable property similar to this has just sold for $570,000. So that's a $170,000 increase for the same type of property without doing any work to it. And I've actually put in probably close to $40,000 in terms of legalizing it, adding the kitchen, adding the bathroom. So my hope is that we can get this refinanced closer to that $600 or even $620 value. So we'll do all the financials in another video, and I'll share how the refinance turns out. Hope you enjoyed it. Take care. So today we're going to go through some of the financials for a duplex conversion that I've just completed in the city of Welland. So let's dive right into some of the numbers here. All right, now before we get started, I just want to share that the reason I'm sharing these financials, I'm not trying to brag. I'm not trying to, come across as someone saying that, look at me, I've done so well. I'm the expert, so to speak. But I just want to share some of the benefits that come with owning real estate. And in this particular case, we've seen a huge run up in the market over the last couple of months, and this is one of the results of that. It's a really good result, but it's not necessarily something that I had the knowledge to predict was going to happen. It's something that came as a result of just owning real estate in a time when the prices are rising very quickly. So I just want to caveat that I'm not predicting that my next investment is going to do as well as this one. It may not, but when it comes to making these investment decisions, you have to go into it with the mindset that you're willing to hold onto this asset for the long term. And then sometimes you get all your returns upfront within 6 months. Sometimes you have to wait 5-10 years to get the results. So I always say, go into it with a long-term mindset. Real estate typically does very well over longer periods of time. And yeah, just try to be patient. It's sometimes when you see numbers like this, you may feel like you're missing out, and you want to jump in to take advantage of it. There's no guarantee that the next 6 months are going to be like the last 6 that we've experienced. So, anyways, let's dive right into the numbers here. So let's talk about the purchase price. So this particular property, I bought it for $399,400. I believe I put my offer in September. So this was a property actually one of my clients got the property under contract, they did the inspection and they decided to walk away from the property because of the inspection. I actually told them point blank, this is a really good property. I want you to buy this property because I think it's a really good investment. They chose not to move forward with it, and they had their own reasons for doing so, which I told them perfectly fine. I just asked them, even, is it okay if I buy this property? And they were more than happy to tell me, hey, go ahead and purchase this property. We'll give you our conditional period to do your due diligence so that you can go in with a firm offer on at the expiry of the conditions. So it worked out perfectly. I told them, listen, no problem, I'll buy it myself. I was able to use the inspection that they've already done, and I was able to use that conditional time period to get my financing in order to make sure that I could go in with a firm offer once the conditional period was over. This was a time just before the multiple offers started in Welland. So we initially put the offer just at the list price when it came out on the market, and we got it under contract, and it was a done deal. We didn't have to deal with multiple offers. There were still many people interested in the property as soon as we got it under contract. So it was that time just before the multiple offers had started. So timing wise, it was really good. And yeah, in terms of my purchase, I had to come up with about $86,855. I didn't have that money just saved up. It came from a refinance of another rental property that I had owned for a couple of years, done well on that property, took the equity out, and I was able to deploy it into this rental property. So that's where I got the down payment from. In terms of the renovation budget on this one, I spent about $31,000 on the actual renovation, but I put in $40,000 here just to cover, the appliances I had to buy, a couple of months of carrying cost, and just, permit fees, miscellaneous expenses that came along with the renovation process. So $40,000 all in is what I think I've spent out of pocket. I'll have to do the numbers just to get the exact number, but it's going to be probably that, or maybe even a little bit less. So that includes permits, city approval. We had to get quite a bit of electrical work done to increase the service of the property. We didn't increase the amperage, but just the panel, we had to double up some of the breakers in order to add extra breakers to accommodate both units. We had to run electrical lines, pot lights, smoke detectors. We put a new kitchen in the basement. So there was, a good amount of electrical work that went into it. We put in a new kitchen and a new bathroom in the basement. We put in a laundry in the basement as well as in the main floor. What we found out is you can't actually have a laundry in the furnace room. So we had to bring the laundry out of the furnace room. Actually, one thing I didn't mention here was plumbing. Plumbing was a big expense on this property, just in the bathroom, as well as to get plumbing access to the kitchen and the washer dryer stack for both the upper unit and the main floor and the basement unit. So that was a cost. We had to put a sprinkler head in the furnace room to avoid having to do a whole lot of fire separation. And the one bigger expense also was just the entryway. So this was a property that doesn't have a side entry to the basement. The front entry is sort of a front landing with staircases going up as well as staircases going down. So we had to enclose that into what's called a vestibule with a fire rated door up going into the upper unit and a fire rated door to the basement, and a whole lot of framing and drywall to close it off and fire rate it. So that was quite a bit of work that went into separating the entrance and meeting the code, because any new drywall to put up has to be the 5/8, and we had to put soundproofing and all of that. So quite a bit of work went there. So all in all, probably around 40 grand to legalize it, get permits, city approval, all of that. And we've created a 2-bedroom upper unit and a 1-bedroom basement apartment. So anyways, in the video, you'll be able to see sort of what the basement apartment looks like. It's something that I'm really proud of, actually, because the property has really good ceiling height, really big windows. So it just feels spacious, even though it's only a 1-bedroom suite. It feels like a great space, and we were able to get a good rent as a result. So speaking of the value, now this particular property, there's a comparable that has just sold for $570 of almost the identical property without a legal basement apartment. So pretty much my identical property that I purchased. So as a result, I think the property is probably worth around that $570 mark, even without making it a legal duplex.
I've put in that the ARV or the after repair value is probably around 600,000 for now, but there's a comparable property to mine that is currently available for sale that is a legal duplex. So once that property sells, we'll know more concretely what the ARV is. But that being said, I don't expect to get the full value of the property on a refinance. From a sale, absolutely I'll get the full value, but when it comes to refinancing, banks are always slightly conservative in the appraisal amounts that they give. So even if the actual value may be as high as 650 or higher, I'm going to say 600 is what I hope to be able to get it reappraised at, which will happen in the next couple of weeks here. So my expectation is that my new mortgage is going to be 80% of that 600,000, about 480, and my total cost, my purchase price plus my renovations is about 440. Actually, that number should be slightly higher to include land transfer tax and some of the miscellaneous. I actually forgot to add that, but anyways, roughly 440 is my all-in cost, meaning my equity that is now built into this deal above my purchase and my renovations is actually 160,000, which is very good. But again, not necessarily because of the work I've done, but more a result of the last 6 months of the market appreciating as I've owned this property. So something to keep in mind. So this is how the expenses are going to work out after I refinance. Before I refinance, my cash flow is actually going to be probably north of $1,000. But after I refinance, my new mortgage payment of that 480,000 is, my expectation is it's going to be around 1,678 based on my conversation with my mortgage agent. Property tax 284, insurance what I'm currently paying is 63. That number may go up slightly on my renewal. So anyways, I just put in my current insurance. Utilities, I'm guessing is going to be about 300. I don't know the full cycle after a year. I'll have to tally it all up and break it down, but this is the normal amount we typically look at for these duplexes. Especially my property is slightly smaller. It's only about 800 square feet. So a 2-bedroom upper unit, there's only one couple living there, and the basement we just rented out to a single person. So 3 people, my expectation is they're not going to use that much of the utilities, but we'll have to see. Property management, another $203. Because I have a property manager that takes care of all the day-to-day with this property. So all in, my monthly expenses are about $2,528. Some expenses that I haven't included here: vacancy, maintenance and repair. I pay my property manager a month's rent to find me tenants. So there's other expenses that are variable expenses that are definitely there. I've just personally not put it in here right now. You can do it when you do your own calculations, but just to give a high level, I've only put in the fixed expenses after it's all said and done. When it comes to the income, so we rented out the upper unit for $1,650. We just rented the basement for $1,350. So all in, our monthly rent is $3,000 a month. And then our fixed expenses are $2,528. This is after refinancing. Before refinancing, I think my mortgage payment right now is like $1,200 a month. So it was kind of funny. The upper unit rent alone, I think I was cash flowing a little bit just from the upper unit rent while I was waiting for the basement to finish. So the numbers really worked out on this deal. So all in all, my total cash flow is going to be about 472. Again, that's not cash flow that I can take from the bank account and spend on whatever I want. This, in my opinion, is cash flow that's going to build up in the bank account. And every time there's a vacancy, it's going to pay for the property manager to find me a tenant. Every time there's a plumbing leak, it's going to pay for the repair. It's going to pay for all the miscellaneous items. Potentially, some of that is going to be pure profit. But again, with this investment, it's a long-term investment. I'm not expecting any of the money to come to me right away. I'm just going to let it build in the property. And at some point in the future, maybe if I pay off the mortgage, I may at that point start drawing down some income from the property. But in the short term, that's not the goal. I want cash flow, but I don't want to rely on the cash flow. This is more for me to be confident that I'm not going to put my own hard-earned savings into this property to keep it going. So those are how the numbers work out after refinance. So let's look at the profit. So in this case, so if I cash flow about $472 a month, that's about $5,600 a year, which is, again, a solid amount to build up the bank account every year. So I'm perfectly comfortable with that. It would be higher if I didn't have a property manager. It would be higher if I didn't refinance the property to as high of an amount. But personally, I'm okay with that. The mortgage paydown once I refinance the property is going to be about $1,082 a month. So that's roughly $13,000 a year of the mortgage being paid down. So that's new equity being built, guaranteed as long as I make my mortgage payments, which I'm absolutely going to make my mortgage payments. So it's guaranteed locked in profit. And the appreciation that this property has actually built since my purchase is $160,000 roughly above my cost of purchase and renovations. So in a funny way, if I break it down per month, it's close to $26,700 per month that I've owned this property, that this property has appreciated. Again, I'm not expecting this to continue every single month, but just a rough breakdown of what it ends up being on a monthly basis for the last 6 months. The one cool aspect that happens, I forgot to break it down in the numbers here, but I actually stand to pull out my entire down payment and renovation budget, as well as 40 grand extra when I refinance this property. So as crazy as this sounds, my initial down payment of $86,856, as well as my $40,000 renovation, and then potentially around 35 or 40 grand extra is what I'm going to be able to pull out when I refinance this property. So I'm looking at close to 160 or so I'm looking at roughly about 160 grand, which ends up being approximately what the new equity was built in this property, right? So about 88, 40 and 40. So something in that range of about 160 grand is what I'll be able to pull out. Now, keep in mind, I'm doing that in order to invest it into another property. I'm not going to take that money out and spend it per se. But it allows me to keep the snowball going, right? To keep accumulating assets. However, I'm now going to have to pay today's market prices for the next investment property I buy. There are no more deals like this at $400,000 available in my city. So when I pull the money out, I'm going to be paying probably close to $600,000 to $700,000 on the next investment that I purchase. Am I expecting it to go to 8 and 9 in the next 6 months? Hopefully not. Honestly speaking, I would like the market to be more calm and just relax for the next couple of years. Who knows what the next few years has to be. Maybe prices will come down, maybe they will flatline, maybe they'll keep going up, right? It's so hard to predict. But my goal has always been, let's buy good quality properties in good neighborhoods that produce positive cash flow, right? Let's create the basement apartment so we can increase the income on these properties so that there is some positive cash flow. And then let's hold on to these for the long term and build the equity, build the wealth that way, so that, maybe I sell this property in the next couple of years and use that funds to pay off another property that I already own, or maybe I just take it and put it into index funds, right? I don't know 100% what the next few years holds for me in my investing, but definitely this property has performed very well. I'm really, really happy how it turned out. The funniest part is when I purchased this property, I didn't know what the ARV was going to be. So you would think that as a realtor who does a ton of these duplex conversions projects for my clients, I help, quite a few clients purchase these type of properties. You would expect that I would know what ARV I would get when I purchased a property like this. I didn't know, right? Because there's very few duplex conversion sales that happen, at least in the city of Welland. There's now going to start to be more now that prices have gone up. People have made some money. I have a few clients who are looking to sort of unload their legal duplexes to cash in on the profits and do whatever the next venture is. So once there's a few more comparables, it'll become a little bit more concrete what we can expect from these refinances. But when I was purchasing it, my hope was that potentially I can refinance it anywhere from the $450 to maybe the $500,000 price point. Hopefully pull out my renovation money. Any more than that, I wasn't really banking on. So that was the mindset I had going into this purchase. I was expecting to leave my down payment in the property. The market lifted in the 6 months I've owned it. So as a result, I'm pulling out everything and I can go buy another property. But even on the next property that I buy, I'm not going to expect to pull out everything within 6 months. My expectation on that deal will be the same, that I can pull out whatever renovation money I put into that deal, and the down payment, my expectation is that I'll have to let it sit in the deal for as long as it takes until I can pull it out to redeploy it into the next venture. So even though this is the BRRRR strategy, I want to highly caution you, don't get disillusioned by so many of these investors that talk about the BRRRR strategy as the ultimate way to build wealth, when it comes to fundamentally, this is simply a strategy of buying good real estate investments, and real estate investing pays over the long term. Once you start getting into the focus being on such short-term time periods, trying to get your money out in 6 months and really looking at it from a short-term time horizon, you start to make bad decisions. You start to look in the neighborhoods that you otherwise wouldn't really want to own a property, but just because the numbers seem to work a little bit better, you can pull out your money a little bit faster, you will deviate from the fundamentals of real estate investing, which is own good properties in good neighborhoods that attract good tenants, create positive cash flow, right? These are the fundamental metrics you want to focus on when buying a good investment property. So I would highly caution you from deviating from that just to try to do a BRRRR, because fundamentally any investment becomes a BRRRR as soon as you have a 20% appreciation, right? Again, let me repeat that. Any real estate investment becomes a full BRRRR as soon as you have a 20% appreciation, because that's the 20% equity you'll need to leave in the deal, and you can refinance and pull out all of your initial investment. So if the market lifts 20%, you can buy a turnkey townhouse, rent it out, wait 6 months, 1 year. If the market has appreciated by 20%, you get to pull everything out as soon as that happens. In our case, we are improving the value of the property to a certain degree by the work we do. I do believe that adding a legal basement apartment increases the value slightly, but just be a little bit cautious whenever you hear stories of people who say they've done complete BRRRRs. I'm a little bit skeptical unless you're really finding properties under market value. And even with that, I really question, why are they getting the properties under the market value? Is it a property that if it were on the MLS, would it really sell for a true premium? And would you buy that property if you were not getting it under market value? Like, is it still a property that you actually want to own? So anyways, just my 2 cents. Hope you enjoyed this video. Hope you enjoyed going through the numbers and getting to see this deal that I've just done. Super happy about how it turned out. And I'm going to look forward to the next property that I get to share with you guys. So all the best. If you're interested in doing the same strategy of adding a legal basement apartment, check out the link in the description below, where you can go to legalbasementapartment.ca, where you can get my beginner's guide to creating a legal basement apartment. This is a guide I created with my architect, Jordan, who helped me out on this project as well to do the drawings. So shout out to him from Jordan Station Design Co. They've been great partners to work with on all of our client projects. They've really done a great job to help our clients create these legal duplexes. And now we're even exploring doing some legal triplexes in the city of Welland. So they've been a great resource to work with. So highly recommend them. So yeah, check out the guide in the link below. Until next time, all the best.